bring in Thomas Flexner of Citigroup to find out if you should be buying REITs or if they should be buying real estate. Good to see you again. Have we hit the bottom? Have we hit the bottom in commercial real estate? Just aggregate, United States.
I don't think that we have for certain hit the bottom. There's still a couple of very significant headwinds that we are confronted with that are primarily in the middle market banking system, which we've talked about before.
Right.
There's roughly $1.5 trillion of commercial mortgage maturities that we're going to see over the next 4 years. A significant portion of those may not be refinanceable. They may be underwater.
Then what happens?
Well, then there's the painful process of restructuring and workout. Yes.
My distinction of commercial real estate is it's grown-ups and there's workouts because it's just business. And the way we all look, whether we own or rent, it's all behavioral in what we talk about existing home sales, new home sales. Do I have that right, that there's essentially two different worlds?
Well, I think that the commercial world is, a logical, business-driven proposition. Residential real estate is very emotional, is very personal, and so it's a complete different type of metric and demand driver. But one of the chief concerns that we have is on the residential side. You've seen the numbers in the last couple of days.
How does that fold over into commercial real estate analysis?
Well, at the end, it folds over by virtue of how it may affect the macroeconomy and confidence levels and spending levels in a broad way. I mean, there is a wealth effect when residential real estate declines that seeps into the rest of the macroeconomy, and that's how it affects commercial.
Here's a quick chart, folks. We don't want to spend a lot of time on this because our charts on commercial real estate, they're good. They tell the story. Banks, commercial banks, their real estate loans and leases, it's a rollover. In the minutia, the price theory, if you will, is it turning around? Is there a spirit to give out money for New York deals or Washington deals to economies doing better?
Absolutely. There is. We are in a very bifurcated commercial real estate market in this country, the haves and the have-nots. The haves, which are the key gateway cities like New York, Washington, Boston, San Francisco, there is significant global demand for product, equity capital as well as debt capital. And so these markets are the first to recover in valuation, but also in fundamentals.
What are you seeing in Europe? I'm so excited about Bloomberg's project. We've got this wonderful office on Finsbury Square, which like in 1600 is where they went to do archery. And we're going to move over by St. Paul's Cathedral. Sir Norman Foster's going to build us a beautiful building. And, there's that kind of initiative and animal spirit. We're seeing it in London. Is there any other cities that Citigroup is particularly enthusiastic about?
I would say London is pretty much differentiated from the rest of Europe. You might include Paris in there as well because of the extreme supply constraints, but also because London and Paris have historically been viewed as a store of value by offshore investors, particularly from the Middle East. And London and Paris are both looked at as the ultimate sort of inflation-deflation hedge simultaneously. Because of scarcity value in those markets, if there's inflation, you benefit from that. And if there's deflation, you also benefit because of the quality of the yield.
Rip up the script. Sovereign wealth funds. They do private equity. They do venture capital. It's IRR, and they're lousy. And they're like, oops. Where else do they go? Do they go back to commercial real estate?
Well, they did. Many of them made mistakes early on, and many of them have restaffed with a much higher quality level of professional. They're quite engaged in commercial real estate in this country, for sure, in Europe, in Asia, and increasingly in Latin America. That is the new sort of flavor of the month.
Here's a chart that really surprised me. You can see it down here, Tom Flexner, in front of Matthew, the camera guy. The 7-year real estate rollover. I was surprised with this. The Census Bureau, and it's like public commercial construction funds. And I thought there'd be a drop recently, but it's just sort of been a leveling decade. Why is that? Have we just built too many buildings?
I don't know if we've built too many buildings as we did in the late 80s. And mid-80s because of tax incentives. I think that this time, as opposed to an oversupply situation having tipped the market, it's an aggregate demand situation as a result of the recession. that put pressure on real estate. I'm a little surprised at that chart as well. I would have thought that that there would have been more of a decline. But you look at New York. There's nothing being built in the office sector for the moment.
What kind of REITs should we buy?
I think,
or should we not?
Well, there's a full-on debate about whether the REIT market generally is fully valued. On the one hand, if you look at earnings multiples, what they call FFO multiples in REITs, they're above the S&P 500 multiple. That's only happened once in the last 12 or 13 years.
What does that signal?
And that was in 2007. Well, that would signal on the one hand from that metric that they may be rich. And if you look at it and compare the dividend yields to the Treasury, that looks rich as well. On the other hand, the cost of capital for these REITs is so low. And in a way, I think of real estate today as almost the least worst investment alternative.
Oh, that's comforting.
Right?
Tom Flexner with a comfortable idea here.
It's asset-backed. It's hard asset-backed. The market has found a floor in the better markets.
Right.
So to your question as to what REITs I would be looking at, I'd be looking at the best-of-class, largest ones that have the greatest concentrations in the best markets, which is just sort of logical.
Great. Thanks for stopping by and update. Tom Flexner with Citigroup as you look at commercial real estate. My message there is watch the sovereign wealth funds. They're going to start buying.